The dollar. The birth of the United States dollar, an event deeply intertwined with the birth of the nation itself, was a significant episode in the annals of global economic history. The dollar's inception was born out of necessity and practicality. The early American economy, punctuated by a disarray of foreign coins, IOUs, and an assortment of colonial scrip, was in dire need of a unified currency to facilitate commerce and solidify the economic foundation of the young nation. The Coinage Act of 1792 settled the dollar as the standard unit of money in the United States. It defined it by a specified amount of silver, a decision influenced by the Spanish silver dollar, which was widely circulated and valued in the Americas. This marked the genesis of the U.S. dollar and laid the groundwork for a monetary system that would eventually steer the global economy. Alexander Hamilton, the first Secretary of the Treasury, was instrumental in the establishment of the dollar. His vision of a strong central bank capable of issuing a uniform currency was a bold departure from the colonial era's diverse and chaotic monetary practices. It was an audacious plan that would sow the seeds for the dollar's future ascendancy. The establishment of the dollar was not merely a procedural act, but a symbolic one. It signaled the economic independence and sovereignty of the United States, severing the residual economic ties to the colonial era. The newly minted coinage was a tangible assertion of American identity, its own unique stamp on the world. The success of the dollar in the United States set the stage for its expansion. The strength of the American economy, backed by vast natural resources, a growing population, and a spirit of innovation, facilitated the gradual acceptance of the dollar beyond American borders. The journey of the dollar from national currency to global reserve currency had begun. This period in the early 19th century saw the U.S. economy begin to flourish. The dollar's stability, backed by a powerful and expanding economy, attracted foreign investment. With the Industrial Revolution in full swing, the U.S. was transforming from an agrarian society into an industrial powerhouse. Railways crisscrossed the country, connecting previously isolated regions and stimulating economic growth. As the U.S. economy grew, so did the influence of the dollar. As the 19th century drew to a conclusion, the dollar had firmly established itself as the United States' national currency and as a significant player in international commerce. The U.S. had emerged as the world's leading industrial power, and the dollar was the currency underpinning this economic juggernaut. The stage was set for the dollar's rise to global dominance in the 20th century. The Bretton Woods System. The Bretton Woods System, established in 1944, was a pivotal moment in the ascension of the dollar. In the aftermath of World War II, representatives from 44 allied nations convened in Bretton Woods, New Hampshire, to devise a new international monetary system. The goal was to create a stable and cooperative financial order that would prevent the economic chaos and contentious trade policies that had contributed to the war. The outcome was an international monetary system based on fixed exchange rates, with the U.S. dollar at its center. Under the Bretton Woods system, countries agreed to peg their currencies to the dollar itself, convertible into gold at a fixed rate. This essentially made the dollar the world's reserve currency, an unprecedented position that greatly enhanced its global influence. The Bretton Woods system reflected the geopolitical reality of the time. The United States, largely unscathed by the ravages of the war and possessing the world's largest gold reserves, was the undisputed economic superpower. The U.S. dollar was the natural choice for the centerpiece of the new monetary system. This period marked the start of the golden age of capitalism, characterized by unprecedented economic growth and stability in the Western world. The Bretton Woods system provided a stable financial environment that facilitated international trade and investment. The dollar's role as the world's reserve currency underpinned this system, and its dominance in international finance was firmly entrenched. However, the Bretton Woods system also sowed the seeds of its own demise. The system's reliance on the dollar's convertibility into gold created a dilemma. As international trade expanded, the supply of dollars outside the U.S. grew rapidly. However, the U.S. gold reserves that backed these dollars did not grow at the same pace, leading to concerns about the U.S.'s ability to honor its gold commitments. This Triffin dilemma would ultimately lead to the demise of the Bretton Woods system in the early 1970s. The petrodollar and globalization. The demise of the Bretton Woods marked the end of the dollar's gold backing, but not the end of its global dominance. In fact, the post-Bretton Woods era saw the dollar's influence expand in a new direction: oil. In the mid-1970s, a series of agreements between the United States and Saudi Arabia led to the birth of the petrodollar system. Under this system, Saudi Arabia agreed to price its oil sales exclusively in U.S. dollars in exchange for U.S. military protection. Other members of OPEC soon followed suit, and the dollar became the de facto currency of the global oil trade. This development greatly enhanced the dollar's global standing. Demand for dollars soared as countries around the world needed them to purchase oil, the lifeblood of the modern economy. This external demand strongly supported the dollar's value, despite the increasing U.S. trade and budget deficits. The rise of the petrodollar coincided with the era of globalization. The liberalization of financial markets, the revolution in information and communication technology, and the rise of multinational corporations all contributed to an increasingly interconnected global economy. The dollar, as the currency of the world's largest economy and the medium of exchange for global oil trade, was at the center of this global economic network. Globalization reinforced the dollar's dominance in a virtuous cycle. The widespread use of the dollar in international trade and finance increased its liquidity and reduced transaction costs, making it even more attractive for international business. This, in turn, further increased its use, reinforcing its central role in the global economy. However, the globalization era also brought new challenges for the dollar. The increasing integration of global financial markets led to greater exposure to financial shocks, as evidenced by the financial crises in Asia and Latin America in the 1990s and the global financial crisis in 2008. The dollar's dominant position in the global financial system meant that these crises often reverberated strongly in the U.S. economy. By the century, the dollar's position as the world's leading reserve currency seemed unassailable. But the seeds of change were already being sown, and the next chapters of this story would be written in the years to come. As the history of the dollar shows, nothing is permanent in the world of international finance. The dynamics of economic power and the march of technology continue to shape the destiny of currencies, and the dollar is no exception. Understanding the dollar's role in the global economy. Reserve currency and global trade. Understanding the dollar's role in the global economy necessitates an exploration of its function as the world's primary reserve currency. Governments and institutions hold a reserve currency in large quantities as part of their foreign exchange reserves. The purpose is to facilitate international transactions and investments, support the value of a country's domestic currency, and mitigate economic crises. The dollar's status as the primary reserve currency means it is held in significant quantities worldwide and used extensively in global trade and finance. In the context of global trade, the dollar has long been the currency of choice for pricing and settling international transactions. Commodities, such as oil, gold, and wheat, are traditionally priced in dollars on global markets. This practice is not merely a convention, but a reflection of the dollar's stability and the depth and liquidity of U.S. financial markets. As a result, businesses and governments worldwide hold dollars to facilitate their international trade activities. The use of the dollar in global markets has significant implications for the U.S. and global economy. It creates a steady demand for dollars, supporting its value and enabling the U.S. to finance its current account deficits. On the global stage, it also introduces a dollar cycle into the world economy. When the dollar's value rises, dollar-denominated commodities become more expensive, impacting countries that rely heavily on commodity exports or imports. Conversely, when the dollar's value falls, these commodities become cheaper, affecting countries differently based on their economic structure. The dollar's global trade role also influences exchange rates and capital flows. Because many international transactions are denominated in dollars, fluctuations in the dollar's value can have ripple effects across the world. For example, when the dollar strengthens, it can make dollar-denominated debts more expensive to service for countries and corporations, potentially leading to financial stress or crises. Understanding the dollar's role in the global economy. Reserve currency and global trade. Understanding the dollar's role in the global economy necessitates an exploration of its function as the world's primary reserve currency. Governments and institutions hold a reserve currency in large quantities as part of their foreign exchange reserves. The purpose is to facilitate international transactions and investments, support the value of a country's domestic currency, and mitigate economic crises. The dollar's status as the primary reserve currency means it is held in significant quantities worldwide and used extensively in global trade and finance. In the context of global trade, the dollar has long been the currency of choice for pricing and settling international transactions. Commodities, such as oil, gold, and wheat, are traditionally priced in dollars on global markets. This practice is not merely a convention, but a reflection of the dollar's stability and the depth and liquidity of U.S. financial markets. As a result, businesses and governments worldwide hold dollars to facilitate their international trade activities. The use of the dollar in global markets has significant implications for the U.S. and global economy. It creates a steady demand for dollars, supporting its value and enabling the U.S. to finance its current account deficits. On the global stage, it also introduces a dollar cycle into the world economy. When the dollar's value rises, dollar-denominated commodities become more expensive, impacting countries that rely heavily on commodity exports or imports. Conversely, when the dollar's value falls, these commodities become cheaper, affecting countries differently based on their economic structure. The dollar's global trade role also influences exchange rates and capital flows. Because many international transactions are denominated in dollars, fluctuations in the dollar's value can have ripple effects across the world. For example, when the dollar strengthens, it can make dollar-denominated debts more expensive to service for countries and corporations, potentially leading to financial stress or crises. The dollar and the international financial system. Beyond its role in global trade, the dollar is also central to the international financial system. It is the most widely used currency for international borrowing and lending, and plays a crucial role in global capital markets. The ubiquity of the dollar in global finance reflects the size and significance of U.S. financial markets, the stability and credibility of the U.S. economic and political system, and the network effects that reinforce the dollar's dominance. One key aspect of the dollar's financial role is its status as the primary currency for international debt securities. Many governments, corporations, and financial institutions worldwide issue bonds denominated in dollars, seeking to take advantage of the depth and liquidity of U.S. capital markets and the broad investor base that is comfortable with dollar-denominated assets. This extensive use of the dollar in global debt markets has implications for global financial stability, as fluctuations in the dollar's value can affect the cost of borrowing and debt servicing for issuers around the world. Another crucial aspect of the dollar's financial role is its use in the global banking system. Banks worldwide hold dollar-denominated assets and liabilities and engage in extensive dollar-denominated lending and borrowing. This practice is not confined to U.S. banks or branches of foreign banks in the U.S. It is a global phenomenon. In fact, the majority of dollar-denominated lending by banks outside the U.S., a phenomenon known as the euro-dollar market, underscores the dollar's central role in global finance. Finally, the dollar plays a key role in international investment, hold large amounts of dollar-denominated assets. Similarly, foreign exchange traders and investors in derivative markets around the world deal extensively in dollars. The prevalence of the dollar in these markets underscores its deep entrenchment in the fabric of the global financial system. Influence on global politics and conflicts. The dollar's dominance in global economics is not just a matter of finance and trade. It also extends to the realm of politics and geopolitics. As the primary reserve currency and the linchpin of the global financial system, the dollar bestows upon the United States significant political and strategic advantages and responsibilities. One of the primary geopolitical advantages is the ability to exert financial power. Given the global economy's reliance on the dollar, the U.S. has the unique ability to implement economic sanctions that can isolate individuals, corporations, and even entire countries from the global financial system. These sanctions can be a potent tool of foreign policy, enabling the U.S. to achieve its geopolitical objectives without resorting to military force. However, this power is not without its limitations. The effectiveness of sanctions relies on the cooperation of other countries and the absence of viable alternatives to the dollar. As other currencies become more prominent and countries seek to circumvent U.S. sanctions, the effectiveness of this tool may diminish. The dollar's global role also imposes responsibilities on the United States. As the issuer of the world's primary reserve currency, the U.S. must maintain the dollar's value and manage its economy responsibly. The dollar's global role means that U.S. monetary policy has far-reaching implications for the global economy. When the Federal Reserve adjusts interest rates or engages in quantitative easing, these decisions ripple through the global financial system, affecting asset prices, exchange rates, and capital flows around the world. The dollar's global role also makes the U.S. a key player in international financial institutions, such as the International Monetary Fund. These institutions, born out of the Bretton Woods conference where the dollar was crowned as the world's reserve currency, are vital in managing global financial stability and promoting economic development. The dollar's influence on global politics and conflicts is a complex and evolving topic. It is a reflection of the interplay between economic forces and political power, and a testament to the significant role that the dollar plays in shaping the global landscape. As we explore the potential end of the dollar's dominance, we must consider the intricate web of economic, political, and strategic considerations underpinning the dollar's global role. The end of the gold standard. The first crack in the dollar's foundation can be tracked back to Bretton Woods system and the abandonment of the gold standard. The Bretton Woods system, established in 1944, pegged the dollar's value to gold and other currencies' value to the dollar. This system was designed to provide stability in the post-war international economy and foster economic growth. However, by the late 1960s, the system began to show signs of strain. The U.S. had been running persistent balance of payments deficits, leading to an outflow of gold from its reserves. At the same time, the amount of dollars circulating outside the U.S. was growing rapidly, fueled by the U.S.'s loose monetary and fiscal policies. These developments led to growing concerns about the U.S.'s ability to maintain the dollar's convertibility into gold. The situation came to close in August 1971, when President Richard Nixon announced that the U.S. would suspend the convertibility of the dollar into gold, effectively ending the Bretton Woods system. This event, known as the Nixon shock, marked the beginning of the era of fiat money, where a physical commodity like gold does not back the value of a currency, but is instead based on the trust and confidence in the government that issues it. The end of the gold standard had profound implications for the global economy and the dollar's role in it. On the one hand, it gave the U.S. more flexibility to manage its economy, as it was no longer constrained by the need to maintain a fixed exchange rate with gold. On the other hand, it introduced a new element of uncertainty into the international financial system, as the value of the dollar and other currencies became subject to the vagaries of market forces and the perceived credibility of government policies. Rising national debt and fiscal policy. Another crack in the dollar's foundation lies in the growing U.S. national debt and the country's fiscal policy. The U.S. government has been running consistent budget deficits for decades, leading to a steady increase in the national debt. As of the early 2020s, the U.S. national debt has exceeded the size of the country's GDP, a height not seen since World War II. The rising national debt is a result of a combination of factors, including tax cuts, increases in government spending, and economic downturns that reduce government revenue and increase spending on safety net programs. While deficit spending can be useful for stimulating the economy during recessions, persistent deficits can lead to a growing debt burden and potentially higher interest rates. The increasing debt has raised concerns about the U.S.'s fiscal sustainability and its ability to meet its future obligations. These concerns can affect the dollar's value in foreign exchange markets and its status as the world's primary reserve currency. If investors start to doubt the U.S.'s ability to service its debt, they could demand higher interest rates on U.S. government bonds or shift their investments to other assets, leading to a depreciation of the dollar. However, it's worth noting that the U.S. enjoys certain advantages that have so far allowed it to sustain high levels of debt. These include the dollar's reserve currency status, which creates a strong demand for U.S. government bonds, and the ability of the U.S. government to print its own currency to meet its obligations. Challenges from emerging economies. A further crack in the dollar's foundation comes from the rising economic power of emerging economies and their growing influence in the global financial system. Countries like China, India, and Brazil have experienced rapid economic growth over the past few decades, leading to a shift in the global economic balance of power. First, these emerging economies have started to question the fairness and sustainability of a global financial system that is so heavily dominated by the dollar. They argue that this system exposes them to the dollar trap, where they are forced to accumulate large reserves of dollars to protect their economies from financial shocks, reinforcing the dollar's dominance. Second, some of these countries have taken steps to reduce their dependence on the dollar in international trade and finance. For instance, China has been promoting the international use of its currency, the renminbi, through programs such as the Belt and Road Initiative and the Asian Infrastructure Investment Bank. Russia and other countries facing U.S. sanctions have also been exploring alternatives to the dollar for their international transactions. Third, the rise of emerging economies has led to calls for a more diversified and multipolar global financial system. This system would feature multiple reserve currencies, reflecting the increasingly multipolar nature of modern global system. Such a system could provide a buffer against fluctuations in the value of the dollar and reduce the global economy's vulnerability to U.S. economic and monetary policy. However, transitioning to a multipolar financial system would be a complex and potentially disruptive process. It would require significant changes in the global financial infrastructure and in the behavior of governments, financial institutions, and businesses around the world. It would also require the emerging economies to develop deep and liquid financial markets and to adopt sound economic and financial policies to inspire confidence among international investors. The rise of emerging economies represents a significant challenge to the dollar's global dominance. However, it also offers a chance for the global financial system to evolve towards a more balanced and resilient structure. The question is whether the world can manage this transition smoothly and orderly, or whether it will be a tumultuous process marked by financial shocks and geopolitical tensions. Prelude to the fall. Signs and warnings. Economic instability and recession. The stability of any currency, including the dollar, is largely dependent on the strength and stability of the economy that supports it. In the case of the U.S., a series of economic instabilities and recessions have served as warnings of the potential fall of the dollar's dominance. Economic instability can arise from many sources, including fluctuations in financial markets, economic policy mistakes, and external shocks. These instabilities can lead to recessions, periods of significant economic activity decline. Recessions can have a profound impact on the value of a currency. They can lead to a loss of investor confidence, capital outflows, and currency depreciation. For the U.S., the most significant recent recession was the Great Recession of 2007 to 2009, triggered by a financial crisis that originated in the U.S. housing market. This recession had far-reaching implications for the global economy and the dollar's status. It led to a significant depreciation of the dollar in the short term, and it raised questions about the stability of the U.S. financial system and the prudence of its economic policies. Furthermore, the policy response to the Great Recession also had implications for the dollar. The Federal Reserve responded by implementing a series of unconventional monetary policies, including quantitative easing, which involved large-scale purchases of government bonds and other financial assets. These policies increased the supply of dollars and led to concerns about potential inflation and a depreciation of the dollar. While the U.S. economy has recovered from the Great Recession and the dollar has maintained its dominant position, the experience has served as a warning. It has shown that economic instability and recession can pose significant risks to the dollar's value and status. The role of international relations. The dollar's dominance is a function of economic factors and a product of international relations. The U.S.'s geopolitical influence and its network of alliances have played a crucial role in cementing the dollar's status as the world's primary reserve currency. However, international relations changes can threaten the dollar's dominance. One such change is the shift in global power dynamics, with emerging economies gaining greater influence on the world stage. These countries have called for a more diversified global financial system and have taken steps to reduce their reliance on the dollar. Another change is the increasing geopolitical tensions between the U.S. and other major powers. These tensions can lead to economic conflicts, such as trade wars and sanctions, which can disrupt global trade and financial flows and reassess the dollar's role in the global economy. Furthermore, international relations can influence the perception of the U.S.'s willingness and ability to maintain the dollar's value and fulfill its obligations. For instance, political gridlock over the U.S.'s budget and debt ceiling has raised concerns about the U.S.'s fiscal responsibility and the risk of a default on its debt. These concerns can undermine confidence in the dollar and lead to a depreciation of its value. The rise of alternative currencies. The rise of alternative currencies represents another potential warning sign for the dollar's dominance. These alternatives can take various forms, including other national currencies, regional currencies, and digital currencies. Other national currencies, such as the euro and the renminbi, have been touted as potential alternatives to the dollar. The euro, as the currency of the European Union, represents a large and mature economic bloc. However, the Eurozone's economic and political challenges have undermined its potential to challenge the dollar. The renminbi, as the currency of the world's second-largest economy, has been actively promoted by China for international use. However, its potential is limited by China's capital controls and concerns about the transparency and stability of its financial system. Regional currencies represent another form of alternative. These currencies, typically used within a specific region or group of countries, can reduce the reliance on the dollar for regional trade and financial transactions. Examples include the CFA franc in West Africa and the proposed digital currency for the Association of Southeast Asian Nations, ASEAN. However, the impact of these regional currencies on the dollar's global dominance is likely to be limited, given their regional focus and the practical challenges of implementing and managing these currencies. Perhaps the most intriguing and potentially disruptive alternative to the dollar is digital currencies, including cryptocurrencies like Bitcoin and proposed central bank digital currencies, CBDCs. These digital currencies offer a new form of money that is decentralized, borderless, and potentially more efficient and inclusive than traditional forms of money. Despite their volatility and regulatory concerns, cryptocurrencies have gained a following as a speculative asset and a means of payment, particularly in countries with unstable currencies. CBDCs, digital forms of national currencies issued by central banks, are being explored by numerous countries to modernize their financial systems and potentially challenge the dollar's dominance in international digital payments. However, the potential of digital currencies to replace the dollar as the world's primary reserve currency remains highly uncertain. They face numerous challenges, including technological hurdles, regulatory issues, and widespread acceptance. Moreover, the transition to a digital currency-dominated financial system would represent a fundamental shift in the nature of money and could have far-reaching implications for the global financial system, the economy, and society at large. In conclusion, economic instability and recession, changes in international relations, and the rise of alternative currencies are all potential warning signs of the end of the dollar's dominance. However, whether these signs will lead to the actual fall of the dollar remains to be seen. As we explore in the following chapters, the future of the dollar will depend on a complex interplay of economic, political, technological, and social factors.